Midterm elections have been front and center this week. We know from exit polls and surveys that voters were concerned with rising prices and inflation this midterm election. This topic is not surprising as CPI, the Consumer Price Index, is at a 40-year high on a year-over-year basis. History can tell us about market performance after midterms. Over the past 75 years, markets often perform better in the 6 months after an election than in the 6 months prior. This correlation happened in 17 of the last 19 midterms. But before we dive into the charts, you may want to ask, is this time different? Midterm elections can signal a change in government spending, tax plans, and priorities broadly. Regardless of which political party holds the reins, post-vote, investors generally have a greater sense of clarity, which has historically been good for financial markets. Companies may be challenged to make decisions when uncertainty is high. From staffing levels to R&D to expansions, these types of decisions may get put on hold when the path forward is unclear. Now let's get into the past market performance. We're not making predictions, but rather setting up a sense of average. In the 6 months and 1 year after a midterm election, markets broadly increased in price. What stands out is that returns were above average. Here's another interesting chart, zooming out. Market performance by party affiliation. Markets go through up and down periods during different administrations. Our point is, regardless of who is in charge, markets broadly find a way to advance over time. Moving on to inflation. Inflation can be a headwind to the economy, and rapidly increasing interest rates aimed at checking inflation can be a drag on markets. This week's inflation report showed the Consumer Price Index increased by a less than expected amount. Prices of goods and services we buy still moved higher, however at a lower rate than in recent months. Stock markets have cheered this news early on, as it does imply the Federal Reserve may not need to raise interest rates as much moving forward. Read this as year-over-year inflation may have peaked. Getting back to the markets, the path into and the eventual path out of this current market moment is and will be different, as they always are. So is this time different? As a 40-plus year resident of the land of 10,000 lakes, I know winter is coming and that we will experience cold weather. And while I can't determine today just how long it will last or how cold Minnesota will be in January, I know that spring and warmer temps will return. Economies and markets also go through cycles. In the headlines, inflation, bull, bear, recession, elections, they all change, but the overall historical growth trend has remained intact. Sure, ideally we'd experience a nice constant line of growth from point A to point B. The reality is that these steady conditions rarely exist. Uncertainty and surprises are a part of life, the market, and the economy. This time is not different, and we plan for this.